Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Thomas Tay. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, FTSE Russell, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Today I spoke with the Managing Director of CN First International Futures Limited, Thomas Tay. We chatted about how U.S. futures traders can now trade some of the Chinese futures markets. Thomas explains how traders can get access to these markets, how the regulations work, and last but not least, how this opens the door to more Chinese futures markets to U.S. traders in the future. So without further ado, let me take you right to the interview with Thomas. Thomas, we met in London last month, and it was at an event where you were discussing very important news regarding China and futures markets. Talk to us about this big news.
Yeah, on the 2nd of June last month, we made an announcement. You might have seen it on the press release. We made an announcement that we have this strategic partnership with Trading Technologies, whereby we are able to offer direct access into China commodity futures market on a single platform. Now, that's the key word here, because yes, people are able to access China via other brokers and so forth, but generally speaking, people will end up with multiple platforms, i.e. you will have a order management system on one screen, you're going to have your data coming through on a different screen. And what we did with TT was that we have this partnership with TT, whereby we can actually offer traders in the US or anywhere else outside of China, whereby they can actually trade the Chinese market on a single platform. Now, what that means is that you will have your order management system, you will have your order entry system, and you will have your data all on a single platform. And therefore, what you can do with that is that you can essentially be running your model, you can be doing your simulation analysis and so forth, and at the same time, placing your real-life order on a single platform.
Yeah, when I was at this event, this was huge news. We had a packed room in there. Everybody was really engaged listening to this because we talk about global markets and how important China is in the global economy, the global markets, but yet it's so hard to get access trading futures over there. So how did this all come about? How did you guys make this happen?
Yeah, I think Anthony, you just hit it you hit the nail on the head, right? Now, the Chinese commodity futures market has sort of opened up partially. The so-called international futures was launched in the late part of 2017. They started with the crude oil futures in Shanghai Iron Exchange, and very quickly followed by the iron ore futures on the Dalian Exchange and the PTA contract on the Zhengzhou Exchange. Right now, that has happened basically late 2017, early 2018, and pretty much until now. One of the biggest problems that the offshore traders have faced is that, the products are available, but how do I connect? How do I open an account? How do I access? Right, and that has been kind of a difficult between then and now. So what we did was we got together with Trading Technologies and we said, right, look, there is a real life problem with connectivity, with access, and how do we fix that? So we worked on that for about a year and a bit, and we have now basically have a platform whereby people are able to open an account with CN First in Hong Kong, gain direct access into the Chinese commodity futures market via the TT front end, TT platform, and be able to do their trades, execute their trades as per they would normally do in the other Western market, without having to jump through the various different hoops and hurdles and so forth that you currently see in the Chinese market.
Just so I'm clear, this is news for offshore traders getting access to Chinese futures markets, but Chinese traders have had access to U.S. futures markets for some time.
The Chinese trader has been able to access the Western market since realistically for the last sort of 8 or 10 years. However, for the offshore traders that are trying to get into the Chinese market, that has been difficult. That has been problematic up until now. I'm not saying that they're not accessible. They are accessible, but they are not easily accessible. So what we did with TT was that we basically took the logistic problem and the regulatory problem on its head, and we kind of fixed that and said, right, guys, we're offering you a platform right now whereby you open an account with us in Hong Kong, you face us in Hong Kong under Hong Kong regulations, but you have a direct access into the Chinese market. Now, what really happens is that the customer faces us in Hong Kong and we will face the exchanges in China. So in other words, we deal with all the logistics, the reporting, the regulatory, all the hassle. We take care of all that stuff on behalf of the customers.
All right, I want to get into some of the details here because one of the first questions I have when I heard this was the money issue. Do I have to send money into China and then be restricted or subjected to all of those restrictions, or how does the money situation work with opening the accounts?
Right. The answer is no, because you are opening an account with a Hong Kong-based broker under Hong Kong regulation. So you face us in Hong Kong, your money stays with CN First in Hong Kong under the protection of the Hong Kong regulations, right? So essentially what happens is that when you open a position in China, we will convert part of your deposit. So take for example, right? So a customer opens an account with us in Hong Kong. He opens an account with, let's say, $100,000, for example, right? Now the customer now has two options. One is that he can instruct us on the assumption that he hasn't got any open position, and he can instruct us to convert those $100,000 into CNY, and we will do that. Or the customer has the other option, which is he does nothing. The money stays as $100,000 in Hong Kong, and he then go ahead and open a position in China, whether it's the crude oil or iron ore or PTA or whatever. Once he opens the position in China, what we do is we will convert part of his $100,000 deposit with us. We will convert part of that into CNY, and we will then send that into China with the Chinese exchanges to cover the margin requirement. Now, when the position is closed, the money comes back into Hong Kong. However, you please note that when the money comes back to Hong Kong, it's going to be in CNY, right? Because we converted part of the US dollar into CNY into China, and when it comes back out, it'll be in CNY. Now, what the customer then has to do is he has to either decide he can leave the money in CNY with us in Hong Kong, or he can instruct us to convert it back to US dollar or euro or sterling pounds or whatever currency.
Hey everybody, I want to take a moment to thank one of our sponsors, FTSE Russell. They are a leading global provider of benchmarks, analytics, and data solutions. The Russell 2000 Index is a key benchmark for small cap U.S. stocks. Be sure to check out the E-mini Russell 2000 Index Futures, contract symbol RTY. For more information on FTSE Russell and their products, please visit FTSERussell.com. I mean, this is so big, I think, because it's opening so many doors. We're seeing this is a big shift, right? This is a big change in our industry. And I want to talk a little bit more about how it works, even from a regulatory standpoint. US-based trader opens up account with you, does what you just said, sends the money there. Is it the same situation with CFTC? Talk to us about how all of the regulation side of things work.
Yes, now Hong Kong is a CFTC approved market. So for a US-based trader to open an account with us in Hong Kong, that is not going to be a problem, right? Because Hong Kong is a CFTC approved market.
Yeah.
And your account and your money stays with us in Hong Kong. We offer access. We CN First in Hong Kong. We offer access to all the market globally, whether it's at Hong Kong Exchange, Singapore Exchange, Tokyo, and the Chinese market and the Chinese exchanges, right? So therefore, the Chinese exchanges is one of the many exchanges that we offer. Now, the crux to your question is that Hong Kong is a CFTC approved market, and therefore there is no problem for the US-based customers to open with us in Hong Kong. China, depending on whether your customer makes sure, depending on your licensing, China may or may not be a problem, but Hong Kong is not a problem.
Okay, so Hong Kong isn't a problem, but what happens if something happens with China and they close their markets, or I don't know, something unexpected happens to where you can't access their markets? Is the money safe in the Hong Kong accounts? What if you have open positions? Just walk us through some scenarios in case something were to happen with China.
Because your money stays with us in Hong Kong. So if any of such situation happen in China, it's really not your problem. It's really not your problem unless you have an open position. If you have an open position and something like this happen, you're just gonna have to close your position out as quickly as possible, and we'll move the money back into Hong Kong. But on the assumption that you don't have an open position, your money sits with us in Hong Kong, you are subjected, like I said, you are subjected to Hong Kong regulation, not the Chinese regulation. We CN First in Hong Kong, we will deal with the problem in China. We can deal with that because CN First is a overseas members of all the 3 Chinese exchanges that offers the international product. As far as the customers in the US is concerned, realistically, you're facing us in Hong Kong. Changes in the Chinese regulatory requirements and so forth has got very little to do with you, really.
What new markets are now open in China? Can you give us an example of some exchanges and some markets that we will now have access to?
Sure. The Chinese market, the Chinese commodity market, because of the regulatory restriction, they are pretty much close to almost anybody outside of China, right? But as I said, in 2017 or late part of 2017, the Chinese regulator has started opening up, and they have designated 3 international products so far. And the 3 international products are the crude oil futures, Oman crude oil futures that trades on the INE exchange in Shanghai, the iron ore futures that trades on the Dalian exchange, and the PTA futures contract that trades on the Zhengzhou exchange. So those are the 3 international products that are available as of now. Now, for those who does follow the news in China, the Chinese regulator have just recently announced the 4th international product that is going to come online very, very soon is the sheet rubber contracts that will be trading on the INE in Shanghai.
With this new deal, what other advantages are you now able to provide U.S.-based traders?
Yes. So basically, now let's go back to the beginning, right? So for a guy that's sitting in the U.S. that wants to access into the Chinese market, he has got two basic problems that he has got to deal with. Problem number one is access. Problem number two is regulatory, right? So let's deal with the problem number one, access, right? So getting access into Chinese commodity futures market has been quite difficult so far, right? For example, you're going to have your order or your OMS on one platform. You're going to have your data coming from a different platform, and so forth. So what we did with this partnership with TT is that we've put everything together on a single platform. So for a customer, for a guy who is familiar or who has been using the TT platform, what you would do is you continue to use the TT platform with all its functionality in there. For example, your auto spreader, your ladders, and so on and so forth. Those are all the functionality that you're currently used to on the TT. You continue to use that, and that's available for the Chinese market as well. Now, on the other hand, what we did was we, together with TT, we are able to um, provide the real-time multi-layer data onto your front end via the TT platform. So that is one that basically solves your first problem, which is access, right? Your market access or your order routing. So by our partnership with TT, that problem goes away because now everything is now available via your TT platform. So that's the first problem. The second problem is obviously the onshore requirement, onshore reporting, onshore regulatory, and so forth. Now, again, this is the advantage that we bring to the users outside of China with our partnership. So essentially, what happens is that the customer outside of China, for example, in the US or in the UK or Middle East or whatever, when they open an account with CN First in Hong Kong, what they're doing is that they are facing us in Hong Kong. Their account is with us in Hong Kong. Their money is with us in Hong Kong, and they are protected under Hong Kong regulations. And what happens is that they will have their so essentially what I'm trying to say is that their account and their money is in Hong Kong, but they have direct access into the Chinese exchange via our TT platform. And basically what happens is that if there is any change on the regulations in China, or there's all the reporting requirement, the regulatory requirement, and all of that stuff, we take care of all of that stuff on behalf of the customer by dealing with the exchanges. And as far as the customer is concerned, they face us in Hong Kong and they only deal with us in Hong Kong. Now, the additional advantage with customer that opens up with us in CN First in Hong Kong is that once the account is set up and the usual account opening, KYC, AML stuff is done, what CN First does is we will provide two things. One, we will provide historical data. We can provide that directly to the customer via our FTP site, or they can have it via the TT platform. So what we will provide is we will provide 6 months of historical tick data for free to the end customer, so that they can actually validate their models and or backtest their strategies and so forth. So that's one. And secondly, what we'll do is we will provide real-time multi-layer. This is the real-time multi-layer order book data to them via TT onto their front end, and basically they can then extract the data onto their model or onto their system and run their trading as like they would normally do in the Western market.
Just so I'm clear, there is nowhere else, anywhere where someone could do this. Is that correct?
Yes, at this moment, we are the first broker to get into this partnership with Trading Technology. Now, for the next foreseeable futures, i.e., for the next sort of 12, 18 months, realistically, we and TT, so CN First and TT, we are the only party that can offer this single platform access into China. Now, I'm not saying that that will be forever. I'm sure there'll be competition coming in somewhere down the road. But until the competition comes along, at this moment, we are the only people that can offer this access into China.
Yeah, and this opened the door. I mean, this, like I said from the beginning, this is big change in our industry. This is the access that I believe many U.S. traders wanted, and it's happening.
Yes, indeed, it has.
What do you see, because you're so close to this and you understand this as well as anybody that I know, what do you see in the future? I mean, look, let's say 2 to 5 years from now, the connectivity, the futures markets, what doors does this open between U.S. futures traders and Chinese markets?
Well, I think there are two parts to that question. The first part is that the Chinese market opening up, that is a trend. That is a trend that is not going to change anytime soon, right? So as of today, we now have three international products, and the fourth one coming down, probably in the next sort of month or and a half or so. And this trend is going to continue, right? Without any doubt, right? Now, looking forward 2 years down the road, what do we see? Well, I definitely see more of the Chinese commodity, Chinese product that will be made available to the rest of the world, right? At the end of 2 years, is it going to be 4 futures contract? No, it's definitely going to be a lot more than it's a lot going to be more than the 4 futures contract. Is it going to be 20? Is it going to be 30? I don't know. I don't know, but it's definitely going to be a lot more than the 4 that we have. But however, based on the sort of words on the streets, is that we are kind of expecting between now and end of 2019, we are going to expect another sort of 5 or 6 more new products, not new products, sorry, 5 or 6 more of the Chinese product that will be made available to the international market. So this is end of 2019. By the time we go to end of 2020, who knows? It may be 20, 25, 30, I don't know, right? I mean, as it stands right now, there are 54 or 56 futures contract in China right now. It wouldn't surprise me in the next 3 or 5 years, every single one of them will be available to the international market.
Yeah, that was going to be my next question. I don't even know how many products there are over there. So you said there's roughly, 54 products?
54 or 56, something like that. Yeah, I can't remember. But it's somewhere between 54 and 56.
And we have currently 4 available.
That's right.
And if you could just repeat what those 4 are again.
Okay, the 4, well, the 3 that are currently available is the crude oil futures on Shanghai Iron Exchange, the iron ore futures on the Dalian Exchange, and the PTA futures on the Zhengzhou Exchange. The fourth one that has been announced, but it's not official yet, is the rubber futures on the INE Exchange in Shanghai.
Yeah, very interesting stuff. Thomas, this was great. We're not done yet, though. I have some rapid fire questions next if you're ready for those.
Okay.
All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. Thomas, what was one of the hardest things for you to overcome getting U.S. traders access to futures markets in China?
Anthony, I think yes, this is a very good question. I think the hardest part is being market awareness and being, the information flow. Now, based on my conversation with the guys in the US, over the last couple of months, I kind of, it come across to me that traders in the US are not very aware of what's happening in the Far East, certainly in China, for 2 reasons. Reason number one, there are not a lot of news flow about those market about the Chinese market into the US, and secondly, there are not much information flow. So what do I mean? Like, for example, when I was going around the US talking to traders, hedge fund managers, broker dealers, and so forth, it almost feel like I'm the first person that actually come around and tell them and talk to them about the opportunity in China. So I think there is a sort of a mismatch between information flow between the Far East and the US, the Far East market and the US traders. I think that's really probably the biggest problem.
What is one attribute that you believe every trader should have?
What's one attribute that every trader should have? Cut loss, right? I mean, I don't care. I've been a trader for the last 28, 29 years of my life. And if there's one lesson I learned is don't be stubborn. If you're wrong, cut it, live and fight another day.
Favorite book you've read lately?
Reminiscence of the Stock Operator, Jesse Livermore.
What is the best piece of advice that you've received about trading?
I've received a lot of advices about trading. But again, I guess, goes back to my first question, the first question that you asked. Don't be stubborn. You're wrong. Admit you're wrong. Eat your humble pie, cut loss, and live and fight another day.
If you could go back in time and give the younger you a piece of advice, what would you say?
For the young trader, I would say learn as much as you can, not just about one single product, but across the market. So, if you're, for example, if you're an oil trader, you want to know about a lot of things outside the oil market. You want to know about macroeconomic, you want to know about geopolitical, you want to know about supply demand, you want to know about what are the alternative energy. I mean, you got to learn the whole ecosystem rather than just your own product.
If you had an elevator pitch me your edge, what would you say?
I'm going to go back to the Chinese market. So basically, my 1 minute pitch will be assessing the Chinese commodity market via CN First will basically help US-based traders to avoid two major headaches, namely one, market access problem, which is solved by our partnership with TT, and two, logistic and regulatory problem in China, which is solved by an account with CN First in Hong Kong, right? So the customers of CN First in Hong Kong only faces us in Hong Kong and are protected by Hong Kong regulations. And we will deal with the regulatories, the financials, and the reporting requirement in China.
Last question for today, Thomas. What's your favorite thing to do when you're not working?
Golfing, mate. Golfing.
Same here, buddy. Same here. Thomas, where can people find you guys on social media, if you're on social media, and also give us a website to check out?
Sure. Our website is www.cnfirst.com.hk, and we are also on Facebook.
Thomas, this was awesome. Learned a lot today. Thank you so much for coming on Futures Radio Show.
Thanks, Anthony.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.